So, welcome. It's great to be here. So, that was some. I don't know if you were here for the Baroness's talk earlier. There were some very big numbers, quite scary numbers. But this event and this panel in particular is all about hope and addressing that challenge. So, first question. This is, as Sandra said, this is a panel all about money and financing. Hands up if you're in the room and you're an investment fund manager. You're managing large amounts of money.
Oh, okay.
Got one. Great. Hands up if you've got a pension. Great. Keep your hands up. Hands up. Add your hand up if you've got a savings account, an ISA, just some money put aside. Hands up if you've got as little as £5 in your pocket in a bank account. Great. So look, the good news is the money is out there and it's in your bank accounts and in your pensions and in your investment funds. We're going to talk a bit about what that looks like. We're going to use some terms that might not be familiar. We're going to try and remember to explain them. If at any point we use a term or some jargon from the financing world and you don't know what that means, wave a hand and we will try and properly explain. But hopefully we'll remember to explain as we go. We are open to questions during the course of this panel. So, slightly terrifyingly, I'm going to invite you at any point, if you want to ask a question, to raise your hand. And Cindy has a microphone. She'll come around. Right, there we are. Scene set. Thank you all for coming up. So, we've established that everyone in the room has resources. Resources are out there. So the question is not where is the money, the question is how do we deploy it? Ben, perhaps if I can invite you to go first, introduce yourself briefly, and then help those of us in the room who aren't from a finance background understand a bit about this idea of the capital stack and the different kinds of finance and resources that are available to help with delivering clean, resilient future cities.
Sure. Hi, I'm Ben Yeo. I'm a portfolio manager of global equities at Royal Bank of Canada on the asset management side, although I'm speaking in an individual capacity. So just to sort of set the scene on a couple of things, both the capital stack and the types of finance we have, I think it's quite important to try and match your project and what you're thinking about to the right kind of capital and the capital stack. So two things we talk about in finance, we often call sort of primary capital or secondary capital. And by primary capital, we kind of mean financing a project from new. This is like saying, I'm going to build a new housing estate or a new piece of infrastructure. It doesn't exist. You need new capital to go ahead and build it. And this is slightly different from secondary capital, where the housing estate is already built, and what you're doing is you are transferring shares or equity in that housing estate or bonds from one owner to another owner. And both mechanisms can be involved in sustainable finance, but you have kind of primary capital funding and secondary capital funding, and different types of investors do different types of that primary or capital, sometimes both, but you have to know which type of project you're funding or not. And then when it comes to thinking about the investors, again, they sometimes look at the equities. So this was like, do we want to take a piece of equity in this piece of infrastructure or housing estate? Or do we want to look at sort of debt financing or bonds, which is a more of an idea of a repayable loan? And then within that capital stack, you have also many different stakeholders who often will partner together on projects. So obviously you have private capital, but you also have public capital. And in institutional world, you kind of have philanthropic capital, which is actually in the regions of tens of billions. You have institutional capital like pension funds and the like, which is actually tens of billions, and in globally hundreds of billions and things like that. And then you obviously have government and other sponsored capital like that. And some of those stakeholders are looking for market rate type of returns. They kind of want, maybe they've got pensioners or other stakeholders behind them, and they kind of want to match what they might find in normal, typical market projects. But some of those are looking for potentially below market rate returns because they're catalyzing other things like a social return or environmental return, Or at early stages, it's quite hard to know where the market return is. So they're just saying, we're going to catalyze early stage projects. So again, knowing you're kind of matching your capital and your institutional blend is quite important before you go ahead in the project and do that. So that's a very quick overview of the kind of background for what we're thinking here.
Amazing, thank you. And so, as you hear, that the scale of resources that are available are significant. The challenge is difficult. £11 billion a year, the Baroness was saying. But the local government pension scheme alone is £400 billion. They were recently mandated to spend at least 5% of that on place-based schemes, including climate schemes. Last year, the Social Impact Investing Advisory Group advised government on how it can work with impact capital. It found £106 billion of existing impact capital in the UK, including, as you say, philanthropy, values-driven scale capital, social investment, and around 10 or 11% of that was already aligned to climate action. So be encouraged. There is resource out there. As I say, some of it's in your pockets, and we're going to talk in a minute. Mary's going to share about how places like Glasgow are mobilising that to deliver things in the places you live and care about. The question, though, is, as I say, why is this capital not flowing more freely and effectively and quickly to deliver the kind of transformation that we need? So the next set of questions are about getting real about the challenges. What's happening on the ground and within cities? So Delphine, I'm going to come to you. Hi, welcome. Perhaps you might introduce yourself very briefly. Help us understand why are resources not flowing? What are the challenges, the technical and the capability issues, which means that the money is not moving as fast as it needs to?
Thank you. My name is Delphine Kenya. I've been working in a bank actually for the past 20 years. And then I moved to Bankers Without Boundaries, the investment bank for us, which is focusing solely on these type of projects which are more difficult to finance, either because it's complex, you need to pull together entities which are less used to put deals together, or because there is some preparatory work to that, so typically in adaptation projects or city projects. I'm running the Climate City Capital Hub, which is funded by the European Commission to support 110 mission cities with their investment plans. And our role is really to help the cities come to create investable projects. And what we've come to realize is that there is no lack of money, lots of different types of money, as we've just heard from Ben. It can be public money, it can be private money, it can be catalytic money or foundation type of money, but it's the lack of investable projects that find their investors, the investors that are going to match the projects. Besides, I'm trying to make sure that we reduce the burden of municipal budget spending, because what is at stake is absolutely phenomenal. Just for those mission cities I've mentioned, there is an estimated gap of 300 billion, actually, euros of funding, and therefore there is no way the municipal budgets are going to absorb that. So we help cities transform, first of all, establish their plans on critical key things that needs to be done depending on the cities, the mobility, energy, built environment sector, typically, or adaptation in terms of adaptation. And then we focus on the key important one and try to create some pathways for the cities to create some target projects that will find a shape towards this capital stack you were mentioning. And there are lots of different routes. Obviously, if you have a completely inclusive type of projects, a project that is based on increasing resilience but has no particular revenue streams for the city, you are not going to tackle the structure and you are not going to address the same type of investors than more established type of infrastructure project or cooling projects where you know that there are investors out there looking for these projects. So there is a lot of steps actually to achieve, obviously starting with political will, but creating the pipeline, scoping the pipeline and creating pathways towards very formalized projects so that they can speak to investors. So our role is really to create some financial literacy and kind of bridge between cities and investors in order to mobilize capital.
Fantastic. Thank you. Caroline, let's think about NatWest. So clearly the mainstream banking sector is a huge provider of debt finance and an investor in places. What are your insights from this? What is it that you find stops the flow of capital, and what more do cities need to be doing to be partnering with you?
So I think it's interesting. We tend to speak a lot about projects, and I think where we've seen it work particularly well is where actually frameworks are set up and pipelines are actually developed, and actually the investing community can kind of see what does that roadmap look like. How are those connected? That obviously gives a dimension of size. That gives a dimension of where the impact and actually this sort of strategic focus is going to lie. And we've seen that particularly, in Germany or in France done very well, where the frameworks have been set up and they're clearly outlined. Now, it is not done at a city level, but it's done more at a regional level, and partially to actually get that capacity to come together. Now, what helps is obviously the sort of future tracking and actually getting the impact metrics that are associated with that. Because subject to the investors, some of those will actually want to have the actual evidence of where the capital that has flowed and the impact that that is having. Is that either from a climate perspective? Is that obviously from a business perspective when you think about flooding and what that has actually kind of the loss avoidance and how that has been beneficial. And through these frameworks that get set up, those metrics are actually outlined quite clearly at the outset. What the benefit is that when you do that at the outset right away is you actually get all the wheels turning at the same time. And in essence, you're actually already building in the collection of that data from the start. It's a lot more difficult to get that data retroactively. So we're seeing when you can do this sort of with a very sort of fundamental roadmap planned out, it really does help. But I will say we've seen a lot of development and advancement in the UK in this fact. I've been sort of focused on this for the last 3 years, where 3 years ago it was much more of a discussion sort of around a table, and now you're already really seeing this coming together, and I'd say that's actually what's really exciting. I think the other thing is I think sometimes the sort of financial, I don't want to call it literacy, I don't think that's fair. I've sat in a lot of rooms with people who are incredibly financially literate and are speaking completely different languages. And I think this is the other piece. Sometimes I think we aren't speaking the same language. We have the same intent, but I think we miss a little bit of the steps in between and how to actually kind of come to the solution. And that is definitely, and I think as you've outlined, the range of investors and what they're actually looking for, the more you can understand that, actually it really helps, and what the sort of risk-return profiles are, what they're looking for, what are their hurdles, what kind of is the impetus for their investment. And in many ways, you will be using the whole scope across all of those investors. So you will be starting with the public or the puffins, et cetera, involvement, through to the institutional, through to private equity. But it's almost putting that piece of the puzzle together. And that's a lot of what we're doing now at NatWest.
Amazing. Now, you used my favorite finance acronym just there. So I'm going to invite you to explain, what do we mean by puffins when we talk about finance?
So puffins are the public institutions like the National Wealth Fund, GB Energy. Again, obviously they have been really set up to help. I think what's interesting when you speak to the National Wealth Fund, especially in this space, they're not there to actually deploy more capital. They're really there to also look how can they lean in more capital. So, again, it's a facilitator. Obviously, they do have capital, but that facilitation should not be underestimated to actually really, kind of make 10 turn to 100 versus it, just being subject to their own investment.
Thank you. Well done. Yeah, private finance institutions, or puffins, take that one away. And as you say, there's new infrastructure sprung up in the last 12 months. The Office for Investment has evolved its mandate. There's a new Office for the Impact Economy in the UK. And this is all part of this idea around brokering and mobilising more private capital in support of public action. So more on that in a moment. Ben, so we've heard about sort of values-driven debt financing. We mentioned pensions before. When we were talking on the pre-call, we were talking about the challenges and the disconnect between the time frame that some of these pension scheme plans happen and the political time. I mean, we're living in a time of extreme political acceleration, aren't we? So perhaps just reflecting more about the challenges that you see as a fund manager in terms of how we bridge those differing cycles.
Yeah, so there's a couple here. So one is definitely there's a time frame mismatch with this kind of education piece. So every year I go and speak to local government trustees, local councillors and these committees, and every year they seem to change. So this is the political cycle. So you have to do this education piece before you get to then where they're making the decisions, and that cycle turns over. So if there was just a stronger thread of that base, knowing of that capital stack, that would help. But then the second thing is, and you echoed it from various mayors and things, is often their election cycle is about 4 years and they have to start campaigning it again soon. A lot of the infrastructure that they want to build is decades long, whether that is for their population growth or roads or health or even education in schools. And so there is a little bit of mismatch within that. The last one I would say, which I think is potentially a fault of some parts in my adjacent industry, is perhaps we've oversold or haven't articulated some of the trade-offs. So this is within it. It's not always win-win, as in sometimes you are talking about what your market rate returns are below. And if you are going to reduce risk or you're going to have fewer heat deaths, then that's something that some stakeholders can take into account, and that might have to go into the calculus. So there are some win-wins, but it isn't always going to be you're going to have really high returns and you're going to do something else. There is a kind of spectrum trade-off, and understanding that as well to then match your kind of investors to the kind of projects you like is something that I think would be helpful.
Great. Yeah, I mean, it comes back to the question about metrics, doesn't it? As you say, what are you measuring, what are you valuing, and how are you playing the long game against the shorter time cycles of politics? Great, so we've heard from our finance side, who have literally sat on one side of the by pure coincidence. Let's come to the city leaders and the place leaders and get a perspective. Mary, tell us a bit about what are you finding challenging as a place leader about partnering with the finance sector and for bringing forward? You've got loads of opportunities. You've got a really exciting program in Glasgow. What are the challenges? Before in a minute we're going to come to the great examples of what's actually happening.
There's lots happening in Glasgow. Sadly, I've been given the karaoke mic if I break into song. I apologise. So my name's Mary Kerr. I'm Climate Finance Manager in Glasgow City Council. And I'm currently working on what we call the model for climate investment, which is essentially looking at how do we bridge that gap with the projects that we've got in climate and the private sector finance. So it's quite a substantial challenge. We've kind of broken it down into two things. Acknowledging the fact that we don't have the skills, capability and capacity to deliver at scale. We're looking at a delivery vehicle, but we're also looking at a climate investment vehicle, which is trying to take into consider some of the challenges, obviously, that have been brought up from the panel as well. So specifically from a local authorities side, it is that pipeline, Caroline, and it's the matching up the pipeline and getting that to an investable stage. And the honest truth is that I don't think we'll ever get there with getting every project investable, purely for the fact that development finance is the risky part, and that's the money that we have to put in at risk. However, I think that there has to be structures that need to get set up that will allow us to play within that risk world. And it is taking into consideration insurance and how everybody's role actually plays and is implemented within that space. Certainly in Glasgow, our first theme that we're looking at is energy, and the big challenge is the fact that if you don't do it at scale, the costs don't come down to a reasonable level and people still can't afford to go into the heat networks or whatever you've put in. So you do need to have that additional investment, and we need to obviously solve that challenge to be able to drive forward the projects at scale. In addition to that scale, and obviously I have been told that lots of councils, we can borrow money. We can borrow money. There's money there to be borrowed. Glasgow's AAA rated, so we're in a good position. It's the return on that money, and how do we actually play that into the space, and how do we play that in with the projects as well? So the challenges are real within the local authority, we understand the benefits. in relation to dealing with political turnover, in Glasgow, we have a really strong political leader, and it's certainly throughout the leadership of the full of the council. Part of this project, we have created a political oversight group, which takes into consideration each party member obviously sits on a panel with us, and we discuss any of the challenges so that people are actually invested in what are we going to do, and acknowledging the fact that some of these projects are going to go on for potentially 20 years, multiple administrations. So it's trying to actually work within the world that we've got and how we actually drive the projects forward. But there's still challenges. And I think certainly from my perspective, there's other pushes and ways that we can actually push on the wider powers that be, national government being one of them, and how those puffins fit into that space as well, and how we're actually driving forward to make sure that we're matching up the projects with the money, essentially.
You were talking before a bit about the sort of chicken and egg problem, which in order to get things investable, you have to invest, but where do you want to reflect a bit on that struggle?
That's purely just the development finance, and to be honest with you, as a local authority, it's public money that we're spending. We're not going to spend that at risk, and that's very real to us. So if we're doing a project, we need to make sure the investment's there for that project. And what I will say as well is that this is the wider strategic level that Glasgow's looking at, and we will come on to it, Sam. We are still driving forward and pushing forward with a number of other projects that are getting us closer to the mark as well, with mobilising additional finance. But it is still a real challenge.
Thank you. Mayor Higgins, it's great to have you with us.
Sure.
So Miami is probably one of the most climate-exposed cities on the planet. Yeah. What are you finding is enabling, and what are you finding difficult in terms of partnering between the city and the finance community?
Well, for us, it's been interesting listening to folks here talking about financial institutions, pension funds, and others that are emboldened in these days with sort of sustainability goals and impact investing. And it's pretty obvious if you've watched the news that over the recent, not so recent, I guess, year and a half ago election, that our financial institutions have really backed off from that because of political pressure from the federal government. It's not that they're not helping communities, they're just afraid to do it around climate. And so they're pivoting to investment in housing or investment in small business. So if you're a city mayor, as I am from Mayor Miami in America, you have to be pretty scrappy to figure out how we're going to finance our resiliency projects. And you're right, we're on the front lines of climate change. We've got literally water everywhere around us. And the Florida Peninsula is not a rock, it's limestone. So we can't build a seawall to stop the sea because it can literally come up, percolate up through the limestone. So we have vulnerabilities in neighborhoods that aren't even located physically near the water as we can see them, but the water's underneath. So in my city, we have about $1 billion in stormwater and flooding projects. And in the broader area, we have about $4 billion in public transportation expansion projects. So it's a lot to finance. Of the $1 billion that we have in flooding and resiliency projects, we are able and have gone to the bond market. So we're able to borrow money, as you were talking about in Glasgow. We can either borrow money on our own out of our general fund, which means basically our property tax revenue has to fund the payments on that. We also are able to go to our voters and ask them and say, here's the flooding projects we want to work on so your streets don't flood. Are you willing to pay a little bit more for that over the next 20 years? So we took out $192 million. We have bonding capacity of $192 million for flooding capacity that our residents actually approved. So it gives you a sense of the disconnect between our national government and the people they are serving. Like, the people will vote to tax themselves and pay an extra $5, $10 a month so their streets don't flood. Whereas we're forbidden almost by national and state law to even say that climate change exists. So the residents and the people at the local level that represent them, we're doing the work. And so those projects are underway. Obviously, we still have an $800 million gap, and I will eventually have to go back and see once those are done. But we're also doing some ways, we're doing projects in some interesting ways to leverage private sector investment, and the private sector is borrowing that capital. So I'll give you a couple of examples. In the downtown area, like many downtowns, it's older, nobody lives there, it's a ghost town at night. It's all publicly owned land. There's 20 acres, most of it's parking lots. When I see a parking lot, I'm like, that is a wasted opportunity, particularly when it's near a train station. And so we have, not sure exactly what that development will result in, but it's an $8 to $10 billion redevelopment, which will include a new transit hub. Built into that RFP are major resiliency and flooding projects, but it's also the opportunity for the developer that bids on that. They'll make money. And as a result, we are able to put in the RFP, we need different resiliency, we want gray water recycling, we want to use renewable energy to the best of our ability, and we need a new transit hub so people aren't waiting outside. And so that's some of the ways we, the city, aren't accessing the capital, but through our procurement process, we're enabling the private sector to bring that in. Another way that we've done this, which, by the way, depending on where you are, was a little controversial, we've created the first ever resilience trust fund in our city, and it allows more density. So a developer, and this is in a part of the city that actually you can build pretty high, but you can double the density in that building. But in order to do that, you have to give $35,000 per unit to our resiliency trust fund that we can work on either stormwater, drainage, could be trees, could be green spacing, so only things in that neighborhood which has intense flooding now. And it doesn't mean we're going to build any higher, but it does mean we might get smaller units, which again is something new. London, of course, has lots of small flats, but in Miami, our apartments tend to be built bigger. And so that's another way we're getting the private sector, and we're giving them something in return. Bear in mind, under state law in Florida, I am forbidden by state law to require this. If I'm going to do anything around resiliency, I have to give an incentive to the developers. And then the other thing on our transit issue, which we've done, we have property taxes. We have within a half a mile of our transit lines we have now and the transit lines we have planned and haven't yet built, we've created what's called a tax increment investment district, a transportation investment district. And so as our property values go up, 25% of that increment we bank into a transportation trust fund, and over the next 30 years, this was a major piece of legislation that I did, over the next 30 years, that'll generate $5 billion for either investment in transit expansion or for operations and maintenance, because as you expand transit, it's not just the capital. It's easier to get the capital than it is to get the operations and maintenance. You know that as a local government. Because if we invest in a 20-mile line, it could cost us $50 million a year to operate it. So that TID, as we call it, gives us long-term capital, long-term operations and maintenance. And then, quite frankly, you got to replace cars, right? I mean, you got to replace trains. So we try to be creative and sneaky. And then the one thing that I think is also important for capital risk is permitting. I don't know what it's like here, but it's atrocious in my city. As a matter of fact, I'm pretty sure that's why I was elected mayor, is I promised to fix this. But when I have a flooding project and it's sitting around in permitting for 2.5 years, that's 2.5 hurricane seasons. Cost of the project goes up 40, 50, 60%. And it also, from a financing perspective, adds a lot of risk. And so, you know, my goal is we get housing permitted in under 6 months, and I'm not going to say I'm going to get a major flooding project done in 6 months, but if I can get that permitted under a year, it makes it a lot easier to finance. So those are kind of the sneaky ways we get around the fact that we don't have a very supportive federal government.
Amazing. Well, congratulations. And I think that point about reframing, repositioning climate action and climate change to speak to all the many other things that it delivers. Action on climate delivers, you say, warmer homes or cooler homes and great thriving places to live and health. So as you say, there's all sorts of things we can talk about which feel more immediate to some people and less toxic to others, which means we can keep making progress. Well, you've beautifully segued us from talking about the challenges in deploying capital, which we heard challenges around capacity, timeframes, bankability, sequencing, into what's actually happening on the ground and some hope and some optimism. So in the final 10 minutes, I'm just going to give a bit of a tour of what's happening that you can be encouraged by and things you can take away. Now, I mentioned the point in the opening about investing from as little as £5 in delivering transformation in the places you live and work and care about. We've heard about some very large bonds in Miami. Mary, tell us a bit about what Glasgow is doing around municipal bonds and democratising investment in places.
So Glasgow are currently working with Abundance on community and municipal investments, and correctly so, Sam, from £5 you can invest. This is by no means a marketing, but we are live just now with a Glasgow investment fund. If you would like to invest in Glasgow, please feel free to do so. This is our third one that's gone live. The first one was for solar panels. The second one was for healthy care in school streets, which they've clearly made that to trip me up. And this third one is focused on smart travel. The purpose for this within Glasgow, yes, it was actually looking at a different borrowing mechanism. We do get it slightly cheaper than PWLB, Public Works Loan Board. Sorry for getting not to use the acronyms. But the other thing for us was the fact that the communities could invest in the projects, so it was making it real and personal for the communities. And as you say, it's inclusive because it's anything from £5. Our current rate that we're out just now, you get 4.55% back in return. So it's still competitive within the world of savings. So it's one of the things that Glasgow are particularly proud of, that we've got off the ground and are driving forward and looking at that whole strategic approach and how we drive that forward as well. It's not going to solve our billions of pounds challenges, but we're recognising the fact that we do need to start doing some of the grassroots work as well as doing the strategic work too that I had mentioned earlier.
Yeah, it's great. I mean, I think it's like 160 million pounds cities around the UK or authorities have raised through Abundance, and I'm sure other providers are available. I'm not sponsored by them. I just think it's really inspiring. Sheffield, round one, at the start of the year, it closed in half the time. £1 million for solar panels and greening of public infrastructure. It's a really practical way that ordinary people can get involved, and I think it's part of this sort of reclaiming agency. Yes, there are some very big numbers, and we are going to need to work with some very large lenders and very big institutions, but we can play our own part and take part in it as well. That's really helpful. And the point about pensions is the same, isn't it? Actually, pensions, not both private pensions and the public sector ones, are stewarded by people with responsibility to invest, not just for a financial return, but for the good. So Ben, reflect a bit about how we can influence the sort of pension sector as pension investors, and perhaps give us a flavour of some hope that you see in the market.
Sure. So yeah, we have a joke. I was just going to reflect on the situation in America, that sometimes you just don't use the C word, right? So you don't use climate, but you talk about the actual thing: flooding, heat deaths, air pollution, and the person in the street, I mean, they get that rather than sort of say at that political level. So sometimes going direct with that, with what you're doing is worth bearing in mind. And as I reflect over the long term in pensions, like I started over 25 years ago here, and what gives me slight hope is there wasn't really any sustainable finance then. No one had net zero. Whether it was corporates or institutions, we weren't really thinking about transition plans, resiliency plans, and things like that. And now we are. We have much further to go, but the conversation has definitely shifted. And actually, you saw that in the Baroness's presentation, where if you went back 25 years ago, the median, the average outlook was looking at a 4-degree world in 2100. And today, actually, we've dropped a whole degree. So now the median outlook is for a 2.5 to 3-degree world, right? Bad news is that's obviously not below 2, but the good news is it's not 4. And you have to believe that if we've dropped a degree, we can continue. So particularly when I speak to young people, they kind of go like, oh, you old people, you've really screwed it up, you've done nothing, you know, all of this. Like, that is part true, but actually, everyone has played their part a little bit to at least lower it at a degree, and I think that can continue. And maybe one small example of something which doesn't necessarily get badged under sustainable or climate, which has happened in London, is the King's Cross redevelopment. There's actually a lot of green, there's a lot of net zero, and there's a lot of redevelopment, and it's also one of the best places in the world to do AI, to do tech, to do business. So it is one of those multi-stakeholder. There was public money, there was private money, there's a whole redevelopment, and it's one of the best places in the world to do all sorts of things. And so that comes across. You can actually look at it through a green lens, you can look at it through a technology lens, you can look at it through a redevelopment lens or a job lens, and it has done a really good net benefit. So I think that's like one small example that I would point to as well.
Fantastic. Delphine, you've got a global perspective through the hub. Tell us where you're seeing examples of cities putting that learning into practice, and tell us also how can cities get involved or find more about what's on offer from the hub.
Sure, thank you. First of all, I think we've heard quite interesting situations where the cities have very different roles. They can be a direct investor in a fund, they can be a borrower of a bond, actually an issuer of a bond. They can be also a convener and pull together a lot of private capital entities and achieve their goals through others. The challenge is to keep control on what's happening. When I started off 2 years ago with the mission cities who are working on smart cities and adaptation, we didn't have much projects, and we worked on their city climate contracts and helped them shape those projects. Now we have 75 projects which have been shown to investors, so it's moving fast, and what I see is that it's exponential, because when you start talking to cities, then they talk to others, and then they give each other ideas. So Glasgow, for instance, is a very good example of a mission city who is super active. We've helped them on the Cascade Braes wind project, scoping, modeling it so that it gets ready to go to go to an investor-based community. But beyond that, Glasgow typically has been thinking about lots of different types of fund structures. We've heard about crowdfunding, district heating funds, and this is super interesting because this is where aggregation starts. You can pull projects together, pull your strategy together through a fund, and then depending on what is the desire, you go to different type of investors. For instance, in Southern Europe, you have a lot of cities who are trying to address social housing, inclusivity, heat waves problems, and so on. So they are creating fund where there is still quite a big public stake into the fund, but to try to crowd in private capital to address, underprivileged communities or people particularly suffering by specific aspects. In the Nordics, sometimes it's more about mobilizing SMEs, in investing into industrial key important directions for the cities. So basically, we see a few pathways and blueprints emerging from this work. Typically, district heating, finding solutions for that is critical. Depending on you mentioned different jurisdiction, you can have some very specific need for specific guarantees to unlock, the structure and make it attractive to investors. So that's one, for instance. We have been working a lot on funds, and there is lots of things behind funds, as I just mentioned, but there is a lot of replication. For instance, Vilnius is in touch with Klagenfurt in Germany, and they are trying to do the same thing, which is really to crowdfund and mobilize more foundations and private money. It's not dissimilar to actually what you're doing through your crowdfunding exercise. But some others are trying to address the energy challenge, like in Dijon right now, you've got some summit on energy, and you've got lots of cities discussing how can you pull projects together and finance them. Built environment and social housing is also a key issue for cities, addressing it. How do you do that when you don't necessarily have obvious commercial viable cash flows? So our role is really to find these kind of, blueprints and make them more attractive to investors, so looking for the right guarantees or helping finding the funds for technical assistance prior to getting to something that can be shown. and pulling on the existing programs, which could be the EIB programs, EBRD programs, or actually even work with private capital. We've managed to get Meridium, for instance, an infrastructure fund, offer some technical assistance to some cities. So basically, there are lots of examples I could take, but what we're trying to do is create a little bit of pathways per sector, if you want, and type of instruments. Miami, you mentioned the bond solution. So in Europe, it's a bit different. It's more complicated for some national entities to issue, but still, we saw Zagreb doing it through an SPV for a utility, the solutions of Glasgow. We've helped, for instance, a city like Marseille. It was a great exercise to help a city think about their portfolio. What can be eligible to a green bond? How do you pool those projects? Can you refinance existing ones? Can you get more funding? Can you leverage, basically investors to get the funds and diversify your funding base? So sorry, I could go on and on, but basically we can see the different type of instruments that are emerging and the type of sectors and blueprints.
Brilliant. I mean, it's really encouraging, and it's great that there are such rich tools out there. And as you say, learning between places is a key part of that, because it's very easy to try and reinvent the wheel. But lots of different places, all these cities, I've heard it said, cities are unique, but the challenges they face are not. And so by learning from each other, pooling knowledge and solutions, as you say, there are some great companies. You mentioned procurement, didn't we? I'm going to be talking about procurement as a resilience tool later on. Come and hear about that. As you say, the way we buy is an investment and is a way to stimulate great green businesses and scale those. Great. I think we're coming into land. So rather than doing questions, I'm going to let you grab the panel during the course of the day so that you can go and refresh before the next session. I just want to encourage you that I think we are seeing a renaissance of private action for public purpose. I think the US has had a long tradition of this and is still very much part of their DNA. In the UK, for the last 60, 80 years, we've moved towards a centralized state, and we've expected a lot to be done from the center, and lots of good came of that, but it also disempowered cities and regions. We heard about Limerick, didn't we, in the kind of the tug of war between the center and the regions. It disempowered individuals to an extent, and the creativity of the entrepreneur in the private sector. And in recent years, we're seeing a resurgence of that private action, whether it's social entrepreneurship, whether it's municipal investment by individuals, and the kind of action that many of you are involved in. So I want to commend that to you. It's not about displacing or pushing aside the democratically mandated leadership. It's about rediscovering a parity of power and a partnership where the mayoralty and the public sector can convene and can use that power and authority, and in doing that mobilize and release the creativity and the deep capital resources of the private sector. There's lots more you can read about that. Come and talk to me if you want to hear more about how you can mobilize that kind of creativity and capital resources if you're a public sector person, or how you work with the private, if you work with the public sector if you're a private sector person. I think that's everything I need to say. If you join me in thanking the panel, and then I'll hand back to you. Thank you very much.
All right.